If you woke up this morning, grabbed your phone, checked the gold price, and had to rub your eyes 3 times, you're not alone. We are living through historic days, a moment that future generations may one day read about in economics textbooks as a turning point that reshaped the global order. Gold has officially shattered every traditional rule and surged past $5,600, a level many thought would take another 15 years to reach. Yet here we are. It's real. Many people have messaged me asking, is the world collapsing? Is a massive bubble about to burst? Why is gold going absolutely insane? To answer that, we need to step back and look at a much bigger chessboard, one defined by China's long-term strategy and America's growing confusion. First, let's understand the nature of this rally. Gold is no longer moving according to normal supply and demand dynamics. What we're seeing is a systemic panic, a half parabolic move, a near vertical rise. It's a gold rush. In just the first 30 days of 2026, gold jumped roughly $920. To put that into perspective, this single month delivered gains equivalent to what once took entire multi-year cycles. Compared to this time last year, gold is up 92%. Even silver, traditionally gold's poorer cousin, has joined the rebellion, surging to $120 an ounce. This tells us one thing very clearly. Capital is desperately searching for real assets, anything tangible that can serve as a safe haven. Why the panic? The answer lies in the currency used to price gold, the US dollar. For decades, the dollar was king. But this month, the dollar index dropped to its lowest level in 4 years.
More dangerous than the decline itself is the loss of confidence behind it.
There's an economic concept you need to understand here. Fiscal dominance over monetary policy. YOLO, government style, who cares about interest?
This is an intervention. You're cut off,
But I need it. Just one more coin?
no!
Normally, when inflation rises, the Fed raises interest rates to tighten spending. But today, US debt has grown so massive that if the Fed raises rates aggressively, the interest burden alone could push the government toward default or force a shutdown. As a result, the Fed's hands are tied.
At the January 29 meeting, the Fed chose not to raise rates. Markets immediately read between the lines. The Fed had surrendered to protect the government.
Printing more money became the only option. And history is brutally consistent. Print more money, and money loses value. When the dollar weakens, gold rises. That relationship is eternal. If economic fragility is the dry wood, then geopolitics is the match setting the gold market on fire. The dollar's weakening creates a foundation where gold's price can ascend. Economic fragility. In January, we witnessed an unprecedented fracture within the Western Alliance, centered around an unlikely name, Greenland. The data shows a stable upward trajectory. But Greenland's strategic linchpin role is critical. The Golden Dome defense system is a multi-layer strategic marvel, utilizing advanced protective layers to ensure security. The data shows a stable upward trajectory. But Greenland's strategic linchpin role is critical.
Any intercontinental missile aimed at the US would pass over the Arctic. That makes Greenland essential for radar installations and interceptor missiles. But that's not all.
Greenland's rare earth reserves are critical. The US strategy hinges on securing direct control. The breaking point came at the January 20 Davos Forum, where the Canadian Prime Minister publicly criticized the US and announced plans to...
The aggressive rhetoric poses significant risks. Trade threats are severe. We need to prepare for potential economic shocks against Canada. President Trump responded furiously, referring to the Canadian Prime Minister as a governor, implying Canada was nothing more than a US state. Even worse, the US threatened 100% tariffs on all Canadian goods. For global investors, this was terrifying. If even America's closest ally could be treated this way, are our assets in the US really safe? While the West spirals, China has been quietly executing a long-term strategy to undermine the dollar.
Hence, China understands that as long as the world runs on dollars, its fate remains tied to Washington.
Since then, China has been building a new monetary system, one backed by gold. Officially, China reports holding just over 2,000 tons of gold, but many experts believe the real number could exceed 5,000 tons, hidden off the books. China has been selling US treasuries and converting them into gold, while constructing a gold corridor among major economies. The message is simple: use our currency. If you fear depreciation, convert it into real gold. Thanks to changes in international banking regulations, gold is now classified as a Tier 1 asset.
That means gold can now support full value borrowing with no reduction. This approach carries risk.
If prices fall, borrowers may default, leaving the holder with the metal.
But the strategy focuses on long-term dominance over short-term safety.
This forces global participants to accumulate gold and operate within a new financial gravity. Institutional demand has created a firm foundation under gold prices. Looking ahead, three possible scenarios emerge.
Escalating instability amplifies this trajectory.
Liquidity expands rapidly.
Gold dominates the environment.
The second scenario reflects stability. Fluctuate. Markets fluctuate without extreme outcomes. The third scenario is a decline.
This outcome requires unusually favorable conditions.
The recent gold surge serves as a warning. We are in a highly unstable era. All that remains is observation as events unfold.